Meta Platforms is experiencing a remarkable resurgence driven by innovative low-cost AI pricing strategies. After a year of stagnation, investors are turning their attention back to this tech giant. Here's a detailed breakdown of today's event and its implications. Looking ahead, several scenarios could unfold following Meta's resurgence. The tech giant recently reported significant advancements in its artificial intelligence initiatives, which have sparked renewed investor interest. These developments come after a challenging period for Meta, marked by regulatory scrutiny and shifts in user engagement on its platforms. The upcoming second quarter earnings report will serve as a critical test of whether Meta's AI strategy can sustain profit growth. Analysts are closely monitoring this, as it could either solidify confidence in Meta's approach or lead to renewed skepticism among investors. The company's pivot towards AI comes at a time when the tech sector is grappling with inflationary pressures and economic uncertainty, making this earnings report particularly pivotal. If Meta's low-cost AI model proves successful, it could catalyze further rotations within the technology sector, lifting not only Meta's stock, but also that of other AI and semiconductor companies. This would signify a broader trend of recovery and growth in the tech industry, potentially reshaping market dynamics. Such a shift could encourage investments in emerging technologies as firms scramble to adapt to a rapidly evolving landscape. Moreover, Meta's rebound may help sustain the overall AI rally, even amidst external pressures such as geopolitical tensions and fluctuating oil prices. The interplay between technological advancement and global economic conditions will be crucial in determining market trajectories. Investors should watch for reactions in the market as these earnings reports and sector performances unfold. As we look to the future, one critical question remains: can Meta sustain this momentum, or will it face new challenges that could derail its recovery? The next few weeks will be instrumental in determining whether Meta can redefine its position in the tech landscape, setting new benchmarks for growth and innovation. Meta's journey to this resurgence has been tumultuous, marked by significant challenges and strategic pivots. Over the last year, the company's shares had been stuck in a prolonged drought, with investors questioning whether its substantial investments in artificial intelligence would yield profitable results. Skepticism mounted due to high infrastructure costs and unclear paths to monetization. However, recent developments have shifted this narrative dramatically. The introduction of low-cost AI pricing and infrastructure plans directly addresses previous investor concerns, demonstrating a commitment to making AI accessible and profitable. Analysts now view these strategies as indicators of potential profitability, marking a fundamental shift from earlier months when Meta's market performance was lackluster and overshadowed by doubts. The broader context includes a tech industry that has been rapidly evolving, with companies like Meta needing to adapt quickly to maintain relevance amid fierce competition. Historically, similar situations have seen companies pivot successfully, but the challenge has always been to ensure that such pivots lead to sustainable growth. Meta's ability to turn skepticism into renewed optimism is a key part of its history, and this latest development represents a critical turning point. The impact of these changes extends beyond Meta, influencing investor sentiment across the tech sector. A renewed confidence in Meta's strategies could signal a broader recovery for tech stocks, potentially revitalizing interest and investment in innovation. As the company leans into its AI capabilities, the outlook appears promising. If Meta can successfully navigate this landscape, it may not only enhance its market position, but also redefine its role in shaping the future of technology. The company's focus on affordability and accessibility in AI could set new industry standards, potentially positioning Meta as a leader in the next wave of technological advancement. Meta's resurgence is significant for several reasons. Firstly, it marks a major shift in market leadership, emphasizing the dominance of AI-driven companies in the current economic landscape. The company, which has faced numerous challenges over the past few years, including regulatory scrutiny and declining user engagement, has pivoted towards artificial intelligence as a cornerstone of its growth strategy. This shift aligns with a broader industry trend where firms leverage AI to enhance operational efficiency and user experience. As geopolitical tensions rise, particularly regarding US-Iran relations, and oil prices remain volatile, investors are gravitating towards firms demonstrating tangible AI cost efficiencies. This shift is not just a trend, it is a reflection of a broader transformation within the technology sector, where companies are increasingly expected to deliver measurable outcomes from their investments in AI. Meta's renewed momentum signals a broader trend in the stock market, where investors are willing to reward companies that deliver real results rather than just hype. This is particularly pertinent for technology portfolios, as Meta has already begun to lead other stocks higher, fostering a sense of optimism among investors. The implications of this are profound. If Meta continues to perform well, it could influence the entire tech sector's direction, potentially setting new benchmarks for performance and innovation. Moreover, it reflects the growing belief in AI's transformative potential, which investors are now willing to bet on. For the average person, this matters as Meta's success could lead to job creation, innovation in technology services, and potentially a more robust economy driven by AI advancements. The ripple effects of Meta's resurgence could also foster a more competitive environment, prompting other companies to accelerate their AI initiatives to keep pace. It also indicates investor confidence, which can affect market stability and growth, enabling businesses to secure financing and invest in new projects. Looking ahead, if Meta continues to harness AI effectively and stay ahead of its competitors, it could not only reshape its own future, but also redefine the landscape of the entire technology sector, driving further advancements and creating a new paradigm for corporate success in the digital age. On July 13, 2026, Meta Platforms Inc. saw its stock surge, marking what analysts declare as its best week in years. The company's market capitalization stands at approximately $1.7 trillion. Investors are responding positively to Meta's announcement of new low-cost AI pricing and infrastructure plans. This strategic shift has sparked renewed interest among traders who have fallen back in love with Meta. The stock's revival comes after a year-long drought during which shares stagnated amid skepticism over the company's AI investments. The previous uncertainty surrounding Meta's ability to monetize its AI initiatives appears to be lifting. Analysts are now viewing these new initiatives as a potential recipe for a comeback. The context of Meta's resurgence is rooted in the company's ambitious pivot towards artificial intelligence, a sector that has rapidly evolved over recent years. The tech giant was once at the forefront of social media innovation, but faced increasing pressure from rivals and regulatory scrutiny. Investors had grown wary of Meta's hefty investments in AI, fearing they would not yield profitable returns. However, with the introduction of competitive pricing and a robust infrastructure strategy, Meta has signaled its commitment to leading the AI charge, which is critical in a landscape dominated by companies like Google and Microsoft. The impact of this shift is significant. Meta's stock price increase reflects a broader optimism in the tech sector, suggesting that investors may be ready to reevaluate tech companies that have previously underperformed. Analysts are cautiously optimistic, noting that Meta's approach to cost efficiencies could set a new industry standard. This renewed confidence could lead to increased funding for further innovations, creating a cycle of growth and investment that benefits not only Meta, but the entire tech ecosystem. Looking ahead, Meta's ability to sustain this momentum will be closely monitored by analysts and investors alike. The company must now execute its plans effectively to avoid the pitfalls of past overhyped recoveries. If Meta can successfully integrate its low-cost AI offerings into its core business model, it may not only reclaim its position as a leader in the tech industry, but also redefine the competitive landscape of artificial intelligence. As we consider Meta's path forward, what are your predictions for the company's future? Will it maintain its momentum or face new obstacles? Share your thoughts in the comments, and don't forget to subscribe for daily deep dives.